Assalamualaikum and hi. My name is Muhd Thaqif bin Akmal Haziem. So now I will present to you about introduction of Iskandar Waterfront City Berhad. So IWCT, also known as Iskandar Waterfront City Berhad, is an investment holding company established on December 31, 1968 in Malaysia. It specializes in real estate development, land banking, and construction. IWCT is part of a larger company that includes 2 associates and 7 fully owned subsidiaries. Their expertise lies in various aspects of real estate, including building, real estate investment, and residential and commercial property management. Currently, IWCT Group's main focus is on developing landed townships. The company went through name change over the years, starting as Granite Industry Berhad and later becoming Tebrau Teguh Berhad on July 2nd, 2014. It adopted the name Iskandar Waterfront City Berhad following a corporate activity.
Assalamualaikum. My name is Akmal Haziem. So today I'm going to talk about introduction of Insan Holding Berhad. Insan Holding Berhad is a Malaysian company that provides offshore oil and gas services. They specialize in floating production, storage and offloading vessels and also offer engineering and construction service offshore. The company was established in 1983 in Johor Bahru, Malaysia, and has expanded its operation to various countries including Norway, Singapore, Brazil, Ghana, Netherlands, Nigeria, Angola, Colombia, India, Italy, Malaysia, Vietnam, UK, US and Mexico. Insan is headquartered in Kuala Lumpur, Malaysia, and is known for its high quality service and recognition in the offshore oil and gas industry.
Assalamualaikum warahmatullahi wabarakatuh. My name is Iman and today I will explain about MFRS 116 for Iskandar Waterfront City. Firstly, the recognition for Iskandar Waterfront City. IWCT Berhad has some rules to follow, which is if it will make the money in the future and if they can measure its cost, they will recognize the asset as PPE. Once they own an asset, they subtract any wear and tear or losses from it. If they need to fix or replace an asset, they add that cost to the asset's value only if it will make the money in the future. They do not add small costs like regular maintenance. When they sell or throw away an asset, they calculate if they made a profit or loss by comparing how much it cost them to how much they got for it. Then, for measurement, IWCT Berhad keeps track of how much they spend on property, plant and equipment or PPE, when they buy it and when they fix it up to use it. They use a method called straight line to calculate how much the PPE loses value over time. Different parts of the PPE that last different amounts of time are kept track or separately. If they find out that the PPE is worth less than they thought, they record the loss. IWCT Berhad follows a set of rules called MFRS 116 to keep track of their property, plant and equipment. They record how much the PPE loses value over time using a method called straight line. They use different rates for different types of PPE. They check every year to make sure they keeping track of the PPE correctly, and they make change if needed. They tell people how they keep track of their PPE and what they do to make sure they're doing right.
Hi, Assalamualaikum. My name is Syamell Afdal, ID number MDA21051. Today I will be presenting about MFRS 140 for Iskandar Waterfront City. First of all, we talk about the recognition. Investment properties are places that are owned or held as a right to use asset with the goal to generate rental income, capital appreciation or both of them. but not for normal business purposes such as administration, production, or sales of goods or services. Investment properties are presented at fair value after first recognition, with adjustments to fair value being recognized in profit or loss. When an investment property is permanently removed from use and no further gain is anticipated from its disposal, it is either disposed of or de-recognized. The difference between the net proceeds of disposal and the carrying amount is recorded as profit or loss following de-recognition of an investment property. Next, we move on to the measurement of Iskandar Waterfront City. Owned investment properties are initially valued at cost. Cost consists of money spent that can be directly related to buying the investment property. Initial measurements are made in a way that's similar to other right-of-use assets for the right-of-use assets held under a lease arrangement that satisfies the criteria for investment property. Only when a change in use occurs do transfers to or from investment property take effect. The fair value at the date of transition is converted to the cost for later accounting reasons in the case of a transfer from investment property to owner-occupied property or inventory. The accounting policy for property, plant and equipment up to date of the change in use must be maintained if the owner-occupied property changes from being its primary place of residence to an investment property.
So now I will present to you about MFRS 116, which is Insan Holdings Berhad. So the recognition is certain parts of property, plant and equipment are treated as separate assets. They are depreciated and replaced over time. Additional costs are added if they provide future benefits and can be accurately estimated. Major inspection costs are included in the asset's value. Repair and maintenance expenses are recorded as they happen. When an asset is disposed or becomes worthless, it is removed from the records along with major components. Any profit or loss from the disposal is reflected in the profit or loss statement. So next, the measurement is property, plant and equipment are recorded at their original cost minus any accumulated impairment losses and depreciation. The cost includes the purchase price and expenses directly associated with making the asset functional as intended by management. It also encompasses financing expenses related to the asset's acquisition, development, or creation, residual values, useful lives, and depreciation methods of these assets are reviewed at the end of each financial year and adjusted if needed going forward.
So firstly, the recognition of Insan Holding Berhad. Insan Holding Berhad reports its investment properties at fair value, which determined using market comparison analysis and takes into account the current state of the market. The company evaluates the fair market value by considering transaction price of similar properties and adjusting for different characteristics such as size, view, and interior quality. These valuations are based on level 3 inputs, which are unobservable inputs according to MFRS 13. Any changes in fair value during the reporting period are recorded in the profit or loss statement. Measurement. Insan Holding Berhad values its investment properties initially at their cost, including transaction fees. After that, the properties are either measured at fair value or cost, depending on the chosen model. Fair value is determined based on the market prices, considering any differences in property characteristics. Change in fair value are recorded in the profit or loss statement. Alternatively, the cost model is used where properties are valued at cost, less any impairment, loss and depreciation. Depreciation is calculated based on the property's expected useful life. The financial statements provide relevant information about the measurement method, value, depreciation, and useful life of the investment properties. So next, I am going to talk about the differences between selected MFRS and MPRS. MFRS, which stand for Malaysian Financial Reporting Standards, are accounting standards used in Malaysia. They govern how companies prepare and present their financial statements, ensuring reliability, transparency, and comparability. MFRS helps stakeholders understand a company's financial performance and position, aiding decision making and building trust in the business community.
Next, I would like to present about MPERS. MPERS stands for Malaysian Private Entities Reporting Standards. It is a set of accounting standards specifically designed for private entities in Malaysia. MPERS provides a simplified and streamlined framework for financial reporting, tailored to the needs of smaller and non-publicly accountable companies. The objective of MPERS is to reduce the reporting burden for private entities while ensuring that their financial statements still provide relevant and reliable information to users. It simplifies certain accounting requirements compared to the more complex Malaysian Financial Reporting Standards (MFRS) used by larger entities. MPERS covers key areas of financial reporting, including recognition, measurement, presentation, and disclosure of financial information. It focuses on providing fundamental principles and concepts that are easier to understand and apply for private entities with limited resources.
So now I will present to you about difference between MFRS 140 and MPERS. The first one is initial measurement of investment property. So the MFRS 140, the cost of investment property is its purchase price and any directly attributable expenditure, while MPERS, the public sector entities may acquire an investment property through a non-exchange transaction. The second one is a subsequent measurement of investment property. For MFRS 140, it provides an accounting policy choice to either use the fair value model or the cost model. Entities must apply the accounting policy chosen consistently to all of its investment property. While for MPERS, it requires entities to measure investment property at fair value. No accounting policy choice is available, unless if an entity cannot measure the fair value reliably on an ongoing basis. The entity accounts for it using the cost model. And the last one is presentation and disclosures. For MFRS 140, it requires entities to disclose the fair value of investment property measured using the cost model. Although entities adopt the cost model, entities will still need to determine the fair value for disclosure purpose. And for MPERS, it requires entities to present an investment property not measured at fair value separately in the statement of financial position.
Finally, the conclusion. IWCT is a company that specializes in real estate development, land banking, and construction. They focus on developing landed townships. They use accounting standards to keep track of their assets like property, plant, and equipment. They assess control over assets, anticipate future economic benefits, and make sure the asset costs are accurate. They calculate depreciation using the straight line method. They also evaluate assets for impairment and provide information on their assets in their financial statements. IWCT has different annual depreciation rates for their assets, and they review the depreciation method, useful lives, and residual values at the end of each reporting period. They also have pledged motor vehicles held under hire purchase arrangement as security for hire purchase payables of the group. They have investment properties that are held to generate rental income or capital appreciation, not for normal business.